Hello there, welcome to this daily market reviews. I am Moderator Jacob of Hector Daville, Forex Night Trading Room, and I will be taking you for this daily market reviews for Friday, the 16th of August 2013. Yesterday we saw most of the pairs showing us their clear directional biases, and therefore we have some nice setups in the charts, and we are going to be doing our review in a minute. Okay. All right, let's get to the charts and see what we have waiting for us. Beginning with the euro against the American dollar, this is the daily time frame. Price as of yesterday gave us that heavy, massive bullish momentum candle that we have been expecting right there. In fact, this candle is long overdue. Over our several reviews, we have been given that signal that price will soon get bullish, breaking this level of resistance there. Okay, from price action on the longer time frame, we had that hint that price will be breaking above this level of resistance. In fact, as of yesterday, we had the beginning of that breakout already. We have the first heavy breakout candle to the upside. So for today being Friday, we are expecting the second massive momentum candle breakout to the upside. Okay, this is an area of resistance that has given price a very tough time to break. Each time price comes over there, it jumps back down, and for the second time, right now we want to break above that level of resistance for price to begin to move on its merry way to the upside. Okay, you can see price took time to prepare for this breakout, which is about to happen right now, because we had several congestion candles for 3 days in a row. Price was taking that preparation, and for today we now have that breakout happening in real time. So we want to see how we can catch in some pips on the euro against the American dollar within this breakout happening right there. Let's see the 1 hour time frame to draw our trade plan on the euro against the American dollar on what we want to be trading for today being Friday, the last trading day for this week. All right, we had a level here acted as our resistance before, resistance also, resistance as of yesterday. You can see how price has been bouncing off that level. Also as of yesterday, we got a breakout of that level, so we should now be waiting for price to pull back down, looking to trade of this former level of resistance, which may now act as support. Next time price comes back down to retest this level here, we will zoom into the 15 minutes time frame, searching for the magic bar bounce to the upside. So this is our most conservative trade plan for the euro against the American dollar. All right, another trade plan here is that price in this in our experience, price might not give us that pullback. Okay, we might have a risky, a very aggressive pullback itself. Price has broken above the weekly level of our resistance there. We might get price a wiggle around in here, and somewhere here, bang again to the upside on the euro against the American dollar. So you want to watch that, but that is an aggressive trade plan. You want to really time yourself around there before getting your hands dirty. Okay, all right, all in all, the directional bias for the euro against the American dollar for today is bullish to the upside. Okay, finally we might have price. Okay, I think that might not quite happen because we do not have a perfect condition for the London Open breakout. So the two trade setup on the euro against the American dollar is this one around in here, break pullback to retest former level of our resistance, which may now act as support around in here for price to bounce back up, or we might get price pushing back around this level here and bouncing back up. Okay, this one here is aggressive, while this one is conservative. All in all, you want to remain bullish on the euro against the American dollar. All right, now let's look into the next pair here, which is the Canadian dollar versus the Swiss franc. Let me zoom in clearly for you to see. In fact, remember, we are analyzed on our last daily market reviews that price was around a level of resistance, this trend line in here, and I told you that it was not sensible for you to search for long opportunities around that level, as prices around an area of resistance, and you might just be trading against resistance. Consequently, as of yesterday, we saw that fall again, back down around that area of resistance, and bearing in mind that based on our weekly market reviews, the long-term time frame tells us that this pair is very bearish and we should be moving to the downside. So for today, we are looking for more bearish pushes to the downside on the Canadian dollar versus the Swiss franc. All right, let's see our 1 hour time frame and draw our trade plan here. On our 1 hour time frame, we have two levels that we are watching. Obviously, their former uptrend has collapsed. You can see how price broke that line, went back, retested the line, which acted as support several times and now acting as resistance. We got that collapse to the downside. A new trend is about to form. Okay, there are two levels of resistance here. Former support now becoming resistance that we are watching. One is this one in here, which acted as former resistance around in here as well, acted as support here and now resistance. And we have this one around in here, support before and now may act as resistance. So the whole of this point here is an area of resistance that we are watching the Canadian dollar versus the Swiss franc to pull back to, for us to search for our bounces back to the downside. Okay, so on this pair, we want to wait for this trade plan to happen. Once we have that pullback, zoom into the 15 minutes time frame and take your entry based on the first magic bar or magic dot bounce down to on this pair. Okay, so we are bearish here. Wait for this trade plan again to happen. All right, that is all there. Let's look into the next pair, which is the sterling pounds against the American dollar. This pair has been my bread and butter. Of course, we have been reviewing this pair, and I want to believe that you have made also these pips to the upside. Like I told you, it was my bread and butter for last week and also for this week. So for today, we are looking at the sterling pounds against the American dollar hitting this final level of resistance in there. Right now, price is sitting on a highway free of traffic. There is no level of resistance apart from this one to hold price. Okay, so on our intraday trading, we are looking to score all of these pips back into our pocket on the sterling pounds against the American dollar. All right, yesterday price broke above our obvious level of resistance there. Price broke above that level. If we get a pullback back to retest this former level of resistance, we might see price kicking again to the upside. The sterling pounds against the American dollar is obviously bullish, and you want to only search for long opportunities. Let's see our 1 hour time frame and draw our trade plan on this pair. On the 1 hour time frame, we are expecting two possibilities here. Okay, the first one is that we have a perfect condition for a London Open breakout, day up, giving us a trending scenario here. Price also is around the extreme of yesterday's daily box indicator. So if we get a sideways price action around the Tokyo session, then we should be expecting a London Open breakout on the sterling pound against the American dollar. Obviously, Hector will be in the live broadcast room to take us on this as soon as it's time for us to get involved. All right, the next trade plan here that we want to also look into on the sterling pounds against the American dollar is to watch this former level here, which acted as resistance, and also coming in confluence with a rising trend line. All right, this is a trend line. Price already gave us two bounces off that point. If price can make any retracement back down here, we want to get involved, looking for nice long opportunity to the upside. Okay, so you want to remain very bullish on the sterling pounds against the American dollar. Finally, just to buttress that bullishness, if you fire off the 3SM indicator, you can see how the dynamic area of support and resistance is just around the trend line in there. And as of yesterday, we got our first bounce to confirm the beginning of the uptrend. Okay, so by the time price pulls back down here, we want to believe that the dynamic area of support and resistance must have a catch up with price, and from there on we will see another push to the upside on the sterling pound against the American dollar. So keep that trade plan. This pair is bullish. Click only for buy. Okay. All right. Let's look into our next pair here. Let me take off this stuff, guys. All right. The American dollar versus the Japanese yen. This is the daily time frame. Yesterday we got price performed just like we review in the last daily market reviews that we are expecting price to come back down. This pair is bearish based on the trend collapse strategy that we have on the weekly time frame, but then the movement has not been straight to the downside. Rather, we have gotten price wiggling up and down before we will get the final push to the downside. Okay, so we are bearish here and we will keep searching for short opportunities. Let's see our 1 hour time frame here and draw our trade plan on the American dollar versus the Japanese yen. We have seen a level here that acted as a support around there. Price has broken below that level. We are now waiting for the pullback to retest former support, which may now act as resistance. Trading the market flow strategy there. Once price makes that pullback, zoom into the 15 minutes time frame and begin to search for your magic bar bounce or magic dot bounce to the downside. You want to cash out some profit before price hit this level here. The 96.917 level is a level of support because it acted as resistance here before, resistance here as well. If you look backward, you will also see some levels there as price bounce there as resistance. So if price comes down here, we may respect that level as support. Okay. All right, so we are bearish here. Wait for this trade plan to play out. Once price bank off this level, search for your bounce back down on the American dollar versus the Japanese yen. All right, keep this one aside. Let's look into the next pair, which is the New Zealand dollar versus the Japanese yen. On the daily time frame here, we got price respecting a level that has been acting as both support and resistance. Support here, resistance here, and right now price has respected that area as resistance. In fact, this is an area of resistance itself. Now let's see what kind of candle we closed as of yesterday. Yesterday we closed as a pin bar of that area of resistance, which is a signal that price should be pushing now to the downside on the New Zealand dollar versus the Japanese yen. Well, we may not want to trade this pin bar here because it is just too ugly. The wick to the downside is too long. Beside, we have a trend formation. Okay, this trend line here has not yet been broken. In fact, let me show you that on our intraday time frame. Let's look at the 4 hours time frame here. That trend line has not yet been broken. See, it bounces around this level as acting as support. Until that trend line breaks, that is when we'll be more comfortable looking for more short opportunities. All right, so let's look into our 1 hour time frame and draw our trade plan for the New Zealand dollar versus the Japanese yen. On the 1 hour time frame here, you can see how this level gave us support there, support around it here, support as well. Also, you can see the daily level of resistance. We got the fake. Okay, that fake there signifies that the bears, the bulls, have failed to take price up. In fact, they broke above that level of resistance, but could not sustain that break. They fell back down into this area here, effectively giving us a fake breakout right there. So right now we are waiting for this trend line in here, this level of support acting as support here, and also this trend line which acted as support before, to give us a breakout, a pullback, then for price to keep kicking to the downside. So this is the trade plan we have on the New Zealand dollar versus the Japanese yen. So obviously you want price to give us that breakout, then the pullback. After this pullback, that is where you want to begin to look for bounces back down on the New Zealand dollar versus the Japanese yen. Alright, that is the trade plan for that. Let's now look into the next pair here, which is the Australian dollar versus the Japanese yen. Well, this is just a slight review here. We have already reviewed this pair as of yesterday, and price has played out just the way we are taught. Okay, we are bouncing off a point of confluence. I will not want to go back into all of those reviews. With this inner trend line, bounce passing off this level, and this level of support here coming together at the junction. Price is now respecting that point of confluence, and we want to search for short opportunities back down. Okay, all right. Let's now look into the 1 hour time frame for the trade plan that we want to draw here. On the 1 hour time frame, price is hovering around our trend line. Okay, a trend line that has acted as support before, but price is now giving us a congestion around that point. In fact, this is what is known as a move congestion. Then we will get a breakout, a pullback, a continuation move. Okay, this is a nice setup happening right there. You want to keep this very close to yourself and make sure you catch those bearish pips. In fact, let me zoom in clearly for you to see what is happening right at that level. In fact, price has been giving us this move bottom out there, up, but gave us that top, down again, up again, down. In fact, you can see that price is giving us what is a flat bottom triangle right there. So the next move we are expect is a breakout, pull back, then bang to the downside on the Australian dollar versus the Japanese yen. Keep your eyes very close on this, and you will see what we get. All right, let's push that one aside. We are bearish here. That's the directional bias for today. Finally, we are looking into the American dollar versus the Swiss franc. This is the daily time frame. Yesterday we got price bouncing off a level of resistance that has acted twice before, and as of yesterday we got it acting for the third time. Okay, we are now bearish. We are looking for more downside on this pair. Remember, this is the sister pair to the euro against the American dollar. They are negatively correlated. If the euro against the American dollar is bullish, then the American dollar versus the Swiss franc is bearish. Looking at that, we are searching for more short opportunity here, back down before price hit this level of support. So let's see our 1 hour time frame and draw our trade plan on the American dollar versus the Swiss franc. This is the 1 hour time frame of the American dollar versus the Swiss franc. Yesterday, our price gave us a level of support in here, broke that level. Trade plan number 1 is to wait for price to pull back to this area. Then you want to search for bounces back down. Okay, well, in most cases price might not give us that whole conservative pullback that we are expecting. Rather, we want to do this. Let's see what we have in here. See how price gave us a move, bounce off this point, bounce off this point as well. Then we went back up again. We bounced off this level. Let us connect all of those bounces and see what we have. All right, that is what we have in there. There we are. Support around in here, support there, support, and also support in here. Next time price pulls back up around this point, we might see price falling back down. Let me zoom out for you to see clearly. All right, so this is the line I was talking about. It acted as support there, support around in here, and that line is coming right here. If price makes any pullback around that point, we might see another fall again on the American dollar versus the Swiss franc. That means on this pair, we are watching price around this area here. All right, once price makes any retracement into that box, that is where you want to be searching for your short opportunities back down on the American dollar versus the Swiss franc. Okay, so I'll keep that setup, and let's see what happens for today before the market finally wraps up. Let's now look into our forex economic calendar for news items that will be released for today. We have 3 high impact news items. Of course, you know we concentrate only on a high impact news items, because these are basically the news items that move the market. They are coming from two from the American dollar and one from the Canadian dollar. You want to be careful trading crosses with this currency. Okay, they will be released within this hour. You want to be careful trading within that hour. High impact news items on Fridays can potentially get the market volatile, kicking you out of some of your positions. Okay, so folks, today is Friday and also the last trading day for this week. We are expecting momentum in the market and also volatility, because the weekly candles will be signing their signatures of the market. Okay, so we expect momentum and volatility at the same time. Alright, I hope you enjoyed this video. Otherwise, you want to post your questions or your contributions in the forum or on Facebook. I will be there myself, or Hector himself can make can proffer answers or make contributions based on the kind of questions you have asked. Feel free, post your questions or contributions in the forum or on our Facebook page, and we'll be there to respond to them. Okay, right folks, I'm wishing you a very profitable day and a nice weekend ahead. Cheers and bye bye.